Welcome to today's broadcast. My name is Colleen Patterson, and I'm the Director of Employer Services and Compliance at Savoy. Information has been coming fast and furious these past 2 to 3 weeks, and really the last few days are no different. This morning, news of record high unemployment claims topped more than 6.6 million in the last week, totaling more than 10 million jobless claims in the last 2 weeks. We are in a relationship business, which means we are in the people business. Every day we ask ourselves, how can we help? And what else can we do to reach as many people as possible who are affected by the pandemic and share our knowledge? In our commitment to help our partners, today we are focusing on 2 items. The first is the news that the Trump administration decided against reopening the federal exchange marketplace, and 2, the economic stimulus programs included in the CARES Act for small businesses. One of the biggest challenges is figuring out, well, what resources or benefits should I use first? Employees are experiencing layoffs today, and in many instances may find themselves losing their employer-sponsored health plan, even if that loss of coverage is temporary. Yes, many carriers are allowing employees who may lose eligibility remain on the plan for a period of time. However, what about those who are truly experiencing a loss of coverage? What can they do to obtain health insurance? So the decision by the Trump administration to not reopen the federal exchange does not impact the fact that under current law, there still is an opportunity to enroll in marketplace coverage. The loss of eligibility under a group health plan is a qualifying special enrollment period, or SEP, to allow for marketplace coverage. Specifically, you may qualify for an SEP if you or anyone in your household lost qualifying health coverage in the past 60 days or is expected to lose coverage in the next 60 days. So depending on the loss of eligibility of the group health plan, you may have an option to look at the marketplace coverage. When you think about the record high unemployment claims, Americans are experiencing reduced income, which means when they apply for marketplace coverage and also apply for a subsidy to help offset the cost of premium in the marketplace, they may qualify for a subsidy when they otherwise may not have. So what about Americans who may be on the marketplace coverage today and are experiencing a change in their income? Do they qualify for a change in subsidy? The CMS language on this is not really definitive. What they do say, though, is to update your income on the marketplace portal. The standard algorithms will then be applied, which will determine if the participant is eligible for a change in their subsidy allowance. So if one thing is clear, you have options. And to help you figure out what these options are, please take a listen to a recent broadcast that we did on Wednesday, March 25th with Scott Overholt, who is Savoy's Vice President of Consumer and Senior Markets. On that broadcast, Scott talked about the resources that are available to our partners today, and those resources are available quickly. So the second topic for today is wanting to discuss what these economic resources are under the CARES Act, which specifically are in place to help employers. The CARES Act has provided an estimated $10 billion, and that's with a B, $10 billion for economic injury disaster loans, also called EIDL loans, and $350 billion for Paycheck protection loans, or PPP loans, to help small businesses. These loans fall under the Small Business Administration, or also known as the SBA. There is a lot of information on these programs. So we've released information in today's daily brief that compares the 2 types of loans based on the guidance that is in the CARES Act. For today, I want to focus on frequently asked questions to help get you started with determining, well, what option is best for you and your business. Not that we're trying to figure that out on today's discussion, but I'm trying to give you some information to help you figure out, where do I even start? So the economic injury disaster loans, and again, that's EIDL loans, are the first line of support, meaning these loans are not new. What is new under the CARES Act is it expanded provisions under the EIDL, including this is the first time a virus or pandemic event has been defined as a disaster. So because of that declaration, businesses in every state and territory are now eligible to apply for the economic injury disaster loans. That's why it was so huge. If you applied before the declaration was made, you may have been rejected because SBA disaster loan assistance then was unavailable for coronavirus-related economic impact. Now, that is not the case. And if you had applied then, you should reapply now, as you might get approved when you otherwise did not. So what's the buzz about these EIDL loans and this grant money that I keep hearing about? It's a question that we are getting nonstop. So the EIDL includes $10,000 emergency cash grants. Applicants can get the emergency cash even if they don't qualify for additional funds. Because lending decisions are based on self-certification and the applicant's credit score, the review process is expected to go quickly. CARES also waives the requirement that you be unable to obtain credit elsewhere. That means you can even apply if you have a line of credit someplace else. If you apply for the $10,000 grant and are approved based on meeting the criteria, the SBA says you will have the money in 3 days. You will be prompted for your bank account information during the application process, as the money is expected to be direct deposited within 3 business days, assuming you get the approval. And that's important to note because a lot of folks that have started taking a look at this were thinking that if my bank account information was being asked for, it must be a scam. And that is not the case. The process and the expectation is to get this money into the hands of business owners as quickly as possible. The Paycheck protection loans are another source of help. Under this program, the SBA backs small business loans through local lenders. In today's daily brief, we provide an overview of this type of loan as well. So we do a side-by-side comparison of the EIDL loan and also these Paycheck protection loans. So for our purposes today, here is what you need to know about these loan programs. Yes, you can get both loans, but the key is to use the money to cover different expenses. So understand what each loan can be used to cover in order to maximize the resources that are available to you. Yes, the Paycheck protection loans do have an 8-week provision for loan forgiveness. However, you have to apply to the lender for approval. So be sure to look at the specifics around forgiveness, as there are limits for non-payroll expenses. And keeping in mind, if you take a look at that side-by-side comparison, you'll see more information about what those loans can be used for. The most important question is, well, how do I get started? So the online application for EIDL loans was posted this past Monday, and the link is also in our daily brief. As for Paycheck protection loans, you can apply through your local bank starting tomorrow, and that's Friday, April 3rd. It's important to note, though, that there is a specific timeline for the different types of applications. So think small businesses versus sole proprietors. So you definitely want to make sure that you pay attention to that because the dates to apply do vary. Also, there is an online sample application that's being circulated, which is also in our guide. We are absolutely going to cover this information in more detail on our webinar on Monday, April 6th. But as I mentioned, there is a lot of information. So I wanted to just give you some important highlights for today. I think one of the things to really think about as we talk about these stimulus programs is that the purpose of these stimulus programs, it's really to start shifting our way of thinking and to look at these federal funds as a means to put money back into the economy by paying employees, paying healthcare premiums, paying qualified business expenses, and hopefully reducing unemployment claims. Although we are all experiencing some of the most difficult times in recent memory, these programs are there to bridge the gap between today and hopefully only a few months from now when we begin to rebuild. As always, should you have any questions, please reach out to your dedicated Savoy team and continue to use the resources available in our COVID-19 section of our website at savoyassociates.com. From all of us here at Savoy, stay healthy and safe. Thank you for joining us today.